Order, order. Paul Maynard to move the motion.
Thank you, and I beg to move that this House has now considered the issue of the rent-to-own sector. And thank you, Mr Holloway. It's a pleasure to serve under your chairmanship for the first time in this Parliament, and a pleasure to see the Minister in his place as well. And I should start, as is not traditional, by a stream of apologies, particularly to the public affairs sector of the United Kingdom, who have experienced great confusion over the past week, because they have seen the title rent-to-own sector and have been desperate to tell me all about rent-to-own home ownership. And we'll be fascinated to see whether the opposition front benchers have been similarly wrong-footed by the issue and will not have to furiously rewrite their own contribution today. I think I also have a second apology to make to the Honourable Member for Makerfield, because somewhat unwittingly I gazumped the topic of a report her all-party group did just before the last election, which I only discovered after I had put in for this debate a few weeks ago. So I know that she will have plenty to say, and indeed we discussed earlier the fact that we could occupy an entire day's debate on this issue between the two of us. The Minister will be relieved to know that we only have 90 minutes, however, so I'm sure we can nonetheless occupy it. But she will have to forgive me if I occasionally borrow from her quality report the APPG put forward. But the real inspiration behind my debate is not the public affairs sector, thank goodness. It is not even the all-party group. It's what I see on a day-to-day basis in my own constituency. It's about what I see my own families in my own constituency having to cope with the financial unexpected shocks that do occur in day-to-day life. And very often we can see the rent-to-own sector as a key component part of that unexpected shock, that when things do happen, it is the RTO sector that almost becomes a transformative experience for them in how they deal with their personal debt. And I've spoken to my local food bank, to my local Citizens Advice Bureau, to the local credit union, and they all tell me the same things. And whilst I always get frustrated when members come to this place and just read out a list of case studies, and I could easily do that for 20 minutes, I would just like to read out one that I think encapsulates the problem, perhaps. This person has mental health problems and physical disabilities and is highly vulnerable. He doesn't understand contracts, finds it very difficult to be assertive and to say no. He brought a purchase from Bright House, and each week that he goes in to pay off his debt, he's under pressure from the sales team to buy something else. He finds it very difficult to cope with. He has brought a laptop, a TV, a DVD player, and a tablet, even though he cannot do email on a computer and just uses Google. As soon as he paid off the laptop, he was under immediate pressure to buy something else. The sales team know he has mobility allowance and seem to think that this represents acceptable funds. He struggles to pay the rent and the electric meter, defaulted on his mobile, which was repossessed. He was pressurised into joining warehouse utilities, so cancelled with BT. But because he can't understand contracts, he didn't realise this would involve a financial penalty of £800 for leaving his contract early, which he's now also having to pay off. He still goes into Bright House every week to pay off his items and finds it a stressful and fearful experience. I could fill the next 90 minutes with similar case studies, and I'm particularly troubled by the suggestion that those who are most vulnerable, who have mobility allowance, are somehow fairer game than any other set of customers for extracting those extra few pounds a week that they rely upon. But I should make it clear that I'm not here today just to bash Bright House or indeed the wider sector in RTO. It is a legitimate business. There is a case for providing short to medium-term credit to people who need it. I recognise that Bright House, with a 70% market share, will get more than its fair share of horror stories. I recognise that too. But the sector employs many people across the country, fulfills a legitimate consumer need. It occupies space on the high street, which might otherwise go vacant. And all of that I recognise, but it doesn't stop the fact that vulnerable people are being exploited in a way that causes me concern and trouble. The challenge for the sector, in my view, is how to adapt what it does do to continue to perform these rules, but not to take advantage of people. I want to think about the extent to which the private sector models truly are broken, if they are broken, whether they are appropriately regulated and how that regulation could be improved, and whether alternative socially funded models are both viable, adequate, and the right way forward also. Because it is worth pointing out that not all private providers are the same. It's worth mentioning here a firm called BioZView, which already adheres to much of what was in the all-party group report and many of their findings, and actually argues for better regulation, but proportionate and fair regulation also. There does need to be some degree of consistency with the principle that credit does have a role to play if the object for which you are seeking that credit will retain value after the point at which you have ceased paying for the credit. In other words, credit probably isn't appropriate for things like food bills or electricity bills, but maybe it is for a consumer good. I also think that what we're discussing here today is a wider issue about how we ensure that markets function in the best interest of the consumer. Key conservative principle, in my view, but I don't want this to be a partisan debate at all, because I think this is a cross-party issue, because we all have vulnerable constituents who will all, I think, be at risk of being sucked into what they can't get themselves out of. I can't possibly hope to encompass the whole debate in my short contribution today, but I do want to set out a handful of areas where I think the government can pay particular attention and encourage the Financial Conduct Authority to focus on as well. In the centre of Blackpool are the bus stops where people get off. It's a complicated one-way system. You get on in one place and half a mile around the corner you get off. But where they wait to get on the buses is a branch of Bright House. So you will get dozens of people standing at the bus stops, admiring the scene inside Bright House. Lots of cheerful, bright consumer goods, bright coloured sofas, settees and beds, enticing consumer goods like TVs, iPads. I'm sure we can all imagine the range of consumer goods. And it's very, very attractive and fetching. It's bright, it's modern. It's actually enticing of what people want to be in their lives, because we live in a world where we almost get defined by what we own these days. I'm tempted to stray off into a spiritual discussion about whether we are measured by what we own these days, whether that's good for us spiritually or not, but it's way beyond the minister's remit and certainly the remit of this house. We'll leave that to God himself, I suspect. But people aspire to own, not rent. And my concern with just thinking that the answer to all of this is to abolish this sector entirely, that people should just rent, actually misunderstands the fact that people do have aspirations to own consumer goods. We shouldn't place an artificial cap on what people want to possess, what people want to own in life. And doing so is a sort of nanny knows best approach almost. It fails to respect individual dignity, in my view. People on low incomes deserve the opportunity of ownership, but not in a market which is exploitative. And when I think of my own constituents, and when I look at who the typical customers are in the rent-to-own sector, there's a broad degree of similarity. 78% are female, 60% have children, 94% are in rented accommodation. Only 1% have hitherto used a payday lender. It's worth reflecting on that just a little, because only 1% might have used a payday lender before they go into a rent-to-own provider. I wonder how many are using a payday lender at the end of their experience with that rent-to-own provider. The bulk of them have only an average of £19 a week in disposable income that they can utilise for paying for all these purchases. To me, that does not represent a great degree of financial resilience, because the model of rent-to-own is about buying more and more goods as time goes on, and that can quickly mount up, in my view. And of course, it is an appealing method of accessing credit. That misleading low weekly payment that doesn't reflect either the entire cost altogether after 3 years, or indeed what would happen as you take on each new item. And I do retain a degree of concern about how staff in these stores are being incentivised to sell more and more goods to each individual, and that there is an incentivisation scheme there. It leads to perverse outcomes for the individuals concerned. I don't think it's necessarily a good thing. I represent, I will probably keep saying this for the next 5 years, but I represent the second most deprived constituency with a Conservative MP. I had the fourth most deprived ward in the country in my constituency. And just standing here today, I can think of right behind the Imperial Hotel, where I know many will have been over their times here, is Imperial Street, which has a mother and baby sheltered housing unit on it. And I have no doubt that some of the people in that sort of sheltered housing who are transient, who experienced a family breakdown or worse, they often need to furnish their houses rapidly and fully. They need the full complement of consumer household goods. They can't just buy one thing and then wait a few months. They need a full furnish. And that is often the model that drives them down to a place like the rent-to-own sector. And it isn't always the right thing for them. And it's a captive market, as we were suggesting earlier, because there's no incentive to lower prices. Competition is not transparent nor evident to these individuals who may not have the necessary financial literacy to really understand how to navigate their way through this market. And as my local credit union, Blackpool Farm and Wide Credit Union, wrote to me, they said, some people do not understand the full cost. Others do not believe they have a choice because they are frozen out from mainstream credit and have a lack of knowledge of alternatives, such as credit unions. I do feel that the sector, or some in the sector, do take advantage of the lack of legal understanding of how the system works to encourage these payments. And the pricing is very unclear. I sent Zach in my Blackpool office out on an undercover mission, or rather more transparent mission, into Bright House round the corner to find out what was going on and to look at some of the prices. And Zach spotted a Samsung TV on display with a product price of £1,053.13, where the total payable after 3 years of weekly payments of £18 was £2,808. It includes what they call 5-star service, which is not optional, nor separately priced, but appears to add almost around £400 to the product price. Yet just down the road in Tesco's, the same product was available off the shelf in Tesco for £1,049 with optional insurance extras. And it's worth noting that insurance, often from the RTO sector, also attracts interest in and of itself. The different elements, such as the goods themselves, the warranty cover, the insurance, are all lumped into one tempting weekly payment. And it remains very hard still, after years of pressure, to properly compare the products available in the RTO sector with what can be obtained by other means. The product codes remain different because there are some slight tweaking of the product. A different coloured fascia board, perhaps, might justify an appellation to the end of the code that then means you can't compare it with what one might get in Tesco's. Many are second-hand, repossessed goods sold as what one might call pre-loved, often costing more than a brand new one might somewhere else. Now, and I know the APPG found that around 1/3 of these products were pre-loved that were on sale in the RTO sector. This isn't necessarily a bad thing in and of itself, because if the credit is more affordable because the item is cheaper, or because in some way the RTO provider has lowered down what they are lending to the customer and they therefore obtain a pre-loved item more affordably than they would a high-spec item, it can actually be a good thing. But that depends upon the ethics and the systems and the processes in place in each individual rent-to-own provider. I will indeed give way, yes, it will give you a chance to catch my breath.
Yes, isn't it a wonderful business model where you get somebody to pay for the goods, repossess them, and then sell them to somebody else for twice the price? They were very offended at the inquiry when I mentioned that, but we actually haven't been able to find out how much is their break-even point. Obviously, it's commercially sensitive, but obviously they have a break-even point, but then they resell the goods to somebody else once somebody has handed them back voluntarily after, say, a year.
I thank the Honourable Member for that contribution, and I have a degree of sympathy with it. Equally, I do point out that where you have an ethical provider that's bartering the customer down so that the pre-loved item is, if you like, a better deal for that individual, it can have a role to play. But she is quite right about the lack of transparency in the sector and assessing what different providers are actually doing, because one can't regulate in a non-transparent market, in my view, and that maybe goes to the heart of it. The other point, which I know she's going to go on to about repossessions, perhaps, is that ownership really requires one to have made all the payments. One can't own 2/3 of a television necessarily, and some of the rent-to-own providers may seek to make exceptions when you have made almost all the payments. But all too often, one can have made half the payments and still find oneself losing the consumer product that one has paid half for. I'm not entirely sure that the regulations are either clear or being applied consistently across the whole consumer market, in my view. And there's no mandatory health warning, as I believe now is meant to be with payday loans. I'm sure the honourable member on the front bench will tell me I'm wrong if I am wrong, saying that one's goods are at risk if you don't keep up the payments. There's a lack of advertising of shorter length loan periods. 3 years is the default option. And I understand why that might be, because shorter periods of time increase the weekly payments. They make it less attractive to the customers that these firms are trying to sell to. But why not sell more modest specifications of these items? Why not debundle the warranties or the insurance, as Buyers Review already does? And it matters dreadfully, this key point about the 3-year contracts, because of the nature of poverty. We've seen a lot of discussion at the moment about child poverty because of how the government is changing the measurements, in my view, for the better. But lying behind that decision was some excellent investigative work about the nature, the ingrained nature of poverty and the churn rate in poverty. Around half of those who are in poverty in 1 year are not in poverty the following year. Around 10% are in what is called persistent poverty. That is 3 years out of 4. So clearly, logically, if one is submitting to a 3-year contract, one is vastly increasing the probability that in one of those 3 years, disaster might strike, something in life might go wrong, one might find the unexpected occurring. If more were able to access 1 year or 2 year lengths of contract, the likelihood of finding a problematic year might actually be reduced. And as a credit union said to me again, the bigger issue we have seen is that people are not just sold one item. We have seen people with multiple debts to a weekly pay store. One customer on low income was paying for 8 different items at a total of £120 a week, £520 per month, which would stretch the budget of the average full-time working person to breaking point, let alone the low-income people who tend to be the users of these stores. The fact that the goods may then be repossessed for non-payment introduces an element of fear that prioritises these payments in the customer's mind, causing them to pay the weekly pay store bill and falling into arrears with other essential bills. And this is particularly the case, I think, where customers have multiple disadvantages. They may have mental health problems, they may have a learning disability of some sort or other disadvantage. And it's simply unclear how these companies are seeking to protect the most vulnerable who come through their door seeking to own a consumer good. There's no obvious assessment of affordability built into the selling process in some of these firms. I recognise once again that Buyers Review do assess affordability and reject 70% of applications, but they are almost unique in the sector in applying that degree of toughness of affordability. And it's a financial vulnerability that goes beyond merely an inability to understand APR. And the cost to the taxpayer when these vulnerable individuals really reach crisis point has not been assessed, in my view. How these most vulnerable customers best access credit for goods is, to my mind, a separate issue that needs particular attention compared to the wider market of roughly 13 million low-income individuals who also need to be able to access low-cost credit for these consumer goods. So I think it's important, and I welcome the fact that the government has extended the local social welfare funds. I know it was a matter of controversy in the last Parliament. I'm glad that they have taken that decision. It is well used and well spent in Blackpool. Many other councils might not be doing such a good job, but I think that where it is well spent, it should be maintained. But we also need to look at the alternatives. I know that, and I know the Minister is something of an expert on credit unions himself, I know that some credit unions have tried to set up local examples. I think the APPG group mentioned the Smarter Buys initiative in County Durham that the Prince Bishop's Community Bank set up. And those are interesting models that I think do have something to offer. But I have concerns over both their scalability and the creation of this national network of differing providers, all with slightly differing rules and regulations. The scalability, I think, is problematic. But I do recognise that credit unions have a very important role to play in this, partly because they often have to sweep up the consequences of an engagement with the rent-to-own sector that has not gone well. So I'd like to look at what role maybe big society capital could possibly play in inspiring innovation in the sector. I know Buyers You View is very keen on having a comparison website, and I know that in the short-term credit market, the Competition Commission encouraged, I think it's called lenderscompared.org.uk, which is a properly regulated independent price comparison website in that sector. I can't see any reason why we can't have a similar sort of website mandated by the FCA or whoever in this sector also. I think it would make a great deal of help, particularly because so many people are now using their mobile phones to shop on, that they can do that comparison at the same time and understand what the best option for them is. I hope the Minister will recognise, however, that there needs to be a fair regulatory playing field between the not-for-profit sector and the for-profit sector. This is not about bashing for-profit providers because they happen to be for-profit providers. That would be a very dangerous path to go down, in my view. There's a broad variety in the sector already. What we actually need is well-understood regulation that puts consumer needs first. And I hope the Minister or the appropriate Minister in the Treasury will meet with me, the APPG members perhaps, the charities involved such as Step Change, as well as the companies involved and the regulator, to look at how conduct can be improved across the board. And can the Minister just put on the record his own view that the FCA needs to focus on fair outcomes for the consumers rather than just inputs of what occurs before the consumer, before the individual takes their product away with them? We need to ensure proper competition and choice for the consumer as the key indicators of effective regulation. I would also be grateful for some thought on how the sector can improve data sharing, not just to identify poor risk, to try to avoid people getting into problem debt, but also how to help the financially vulnerable and how they can be identified and offered alternative means to access the goods that they might also need. I hope the Minister would agree with me that bundling expensive warranties as a condition of the loan really does seem to contravene the principle that lenders ought to treat consumers fairly. That has to be at the heart of all regulation. If it isn't transparent and clear just from a day-to-day consumer engagement in the shops, in my view, it isn't actually occurring. So I'd like the government to press the FCA to work more closely with the industry, to accelerate what it's doing, to try and make sure that we are as diligent on this issue as we have been in the past Parliament on issues like payday lending. Because to me it is all part of the same package. It's all about financial resilience. Can he also outline what steps he thinks the government can take to improve people's ability to manage their own debts? Does he share my concerns about the examples we've heard today of vulnerable people facing life-changing amounts of debt because of what is, to all intents and purposes, in my view, the mis-selling of consumer goods, credit and insurance? I will again, more than happy to get another
Thank you. You've been
pause for
generous in
breath.
giving way. Could the Minister also perhaps review the debt advice available for people in debt? Because managing your own money, first of all, involves getting out of the debt that you may be in and then being able to manage the money. That's really important. And there was a recent report on the fee charging debt management agency which showed that 60% of the fee chargers actually put people in a worse position. So I think we really need to look at the availability of the free advice sector.
I thank the Honourable Member. I'm sure the Minister heard that, and I'm trying to rapidly reach my conclusion because I've been going on for far too long now. I know Lord Freud has met with Step Change, the debt management charity, but will the Minister agree to meet or to convene a cross-departmental working group involving BIS, DWP, DFE and sector representatives? Because this, I think, has issues across government, across the government departments, not just in the Treasury. And can I just finish by trying to make a point of principle that I hope the Minister can agree with, which is that I remortgaged about 4 or 5 months ago now. It has never taken so long in my life to remortgage my property. I was locked in my bank for about 6 hours, it felt like, going through every last iteration. And I understand why that is. We have to improve safeguards for borrowing. We have to reduce risky borrowing. We have to make sure that the banks are sustainable. And yes, my mortgage payments are a substantial element of my outgoings and part of my financial arrangements. Why are we not as careful about these types of credit that we're discussing here today as we are about mortgages? Because if one's available disposable income is only £19 a week, then even paying £12 a month is a sizable contribution. And there ought to be a point of principle here that it matters as much to these people as it does to me how my mortgage is regulated, how their consumer credit is regulated. And I think we need, as a government, to look much more closely at how we encourage financial resilience. We need multiple bulwarks for families against the unexpected. And too often it's the unexpected that leads us down a path to perdition financially. And proper regulation, proportionate regulation, that doesn't seek to condemn the private sector for being the private sector, I think is the best way to allow people to fulfill their legitimate aspirations to own consumer goods. I've asked a lot of questions, I've talked a lot today, I apologise to those present. I look forward to hearing the Minister's reply.
The question is that this House has considered the rent-to-own sector, and in fact we'll get to hear from Mr Maynard at the end of the debate because he has 3 minutes at the end to sum up the other contributions that he's